Let's dive into Pi Network, a cryptocurrency project that has captured the attention of millions worldwide. We're going to take a comprehensive look at its recent performance and what the future might hold, and its wild ride in June 2025. June was a particularly turbulent month for Pi Network, marked by significant price fluctuations and shifts in market sentiment. We'll dissect the key events and analyze the underlying factors that contributed to this volatility. The Pi IOU price experienced a notable correction, dropping nearly 28%. This decline raised concerns among investors and sparked discussions within the Pi Network community, from $39 to barely above $28. This price movement reflects the inherent risks associated with trading IOUs, which are essentially promises to deliver the actual Pi coin upon the launch of the open mainnet. For millions mining Pi on their phones, who have dedicated time and effort to the project, this wasn't just another crypto dip that they could shrug off, it was a gut check, a moment of truth that tested their belief in the project's long-term potential. The price drop served as a stark reminder of the speculative nature of the IOU market. The decline wasn't sudden, a flash crash that could be quickly dismissed, but a slow grind that eroded confidence and sparked debate within the Pi Network community about the project's future and the true value of the IOU. This period of uncertainty highlighted the importance of understanding the difference between IOUs and the actual Pi coin. The real Pi coin isn't even live yet, it's still in the development phase, with the open mainnet launch being the key milestone everyone is waiting for. What's trading are IOUs representing a promise of future Pi coins, and their value is largely based on speculation and anticipation. Placeholders for the real thing once open mainnet launches, which will mark the true beginning of the Pi Network ecosystem and the actual utility of the Pi coin. This means the price is driven by speculation, not real utility, making it highly susceptible to market sentiment and external factors. The IOU market is essentially a prediction of what the Pi coin might be worth in the future. As July begins, everyone's asking with bated breath and a mix of hope and apprehension, will the downtrend continue, pushing the IOU price even lower, or is a turnaround coming, signaling renewed optimism and a potential rally? We'll break down June's slump, examining the key drivers behind the price decline and the overall market conditions that contributed to the bearish sentiment. The risks still looming that could further impact the IOU price and the future of Pi Network. And 2 reasons July could be a game changer for Pi, potentially setting the stage for a more positive outlook. We'll cover tech updates, providing insights into the latest developments in the Pi Network ecosystem and the progress towards the open mainnet launch. Market sentiment, gauging the overall mood of the Pi Network community and the broader cryptocurrency market, and how Pi compares to its rivals, analyzing its strengths and weaknesses in relation to other cryptocurrency projects in the space. No hype, just facts and analysis, providing you with an objective and data-driven perspective on the current state of Pi Network. Ready? Let's get into it and explore the intricacies of Pi Network's journey. Grab your coffee, settle in, and let's delve into the world of Pi Network and uncover what the future might hold. What caused Pi's 28% drop in June? Mostly profit-taking and fading hype. On-chain data showed a spike in selling, especially mid-month, as big holders cashed out. The lack of major news from the Pi core team didn't help. No open mainnet date, no new roadmap. When Pi broke below $35, automated sell orders kicked in, accelerating the fall. Social media sentiment turned negative, with Pi scam and no mainnet trending. In crypto, perception is reality, and Pi's narrative in June was anything but bullish. Without positive momentum, the price kept sliding. The numbers told a story of fading confidence. Pi's drop didn't happen in a vacuum. It was a symptom of a much larger downturn affecting the entire cryptocurrency landscape. To truly understand the factors that contributed to Pi's decline, we need to zoom out and examine the broader market conditions that were at play. June was brutal for all of crypto. It was a month marked by significant losses, widespread fear, and a general sense of uncertainty that permeated the digital asset space. The term crypto bloodbath was frequently used to describe the market's performance, and for good reason. Bitcoin, the bellwether of the crypto market, fell over 15%, a substantial drop that sent shockwaves throughout the industry. This decline in Bitcoin's value had a cascading effect, impacting virtually every other cryptocurrency in the market, dragging altcoins like Ethereum, Solana, and Cardano down with it. These alternative cryptocurrencies, often referred to as altcoins, experienced even steeper declines than Bitcoin, further exacerbating the overall market downturn. When Bitcoin stumbles, speculative projects like Pi get hit hardest. These projects, which often lack the established track record and market capitalization of Bitcoin, are particularly vulnerable to market volatility and investor sentiment. High interest rates and economic uncertainty created a risk-off environment, prompting investors to reevaluate their portfolios and seek safer havens for their capital. The Federal Reserve's monetary policy decisions played a significant role in shaping market sentiment during this period, made investors risk-averse, favoring safer assets like gold and government bonds. This flight to safety further contributed to the decline in riskier assets like cryptocurrencies. Pi, still in pre-launch and not yet fully established, was especially vulnerable to these market forces. Its lack of liquidity and limited trading history made it more susceptible to price swings and investor panic. The market-wide sell-off, negative macro trends, and a flight to safety all combined to create a perfect storm for cryptocurrencies, particularly those in their early stages of development. All amplified Pi's losses, magnifying the impact of the broader market downturn on the project's value. The interconnectedness of the crypto market meant that Pi was not immune to the negative sentiment and selling pressure affecting other cryptocurrencies. Pi's 28% drop was part of a bigger storm, a tempest that engulfed the entire cryptocurrency ecosystem and left few projects unscathed. Not just a project-specific failure, it was a reflection of the overall market conditions and the challenges facing the crypto industry as a whole. Context matters. The whole market was bleeding, experiencing a significant correction that wiped out billions of dollars in value. Pi's internal issues, such as network congestion or delays in development, made things worse, adding fuel to the fire and exacerbating the project's challenges. But the red tide was everywhere, engulfing the entire crypto market and leaving a trail of losses in its wake. It wasn't just a Pi problem, it was a crypto problem. A systemic issue that affected the entire industry and highlighted the inherent risks associated with investing in digital assets. June was a storm, a period of intense volatility and uncertainty that tested the resilience of even the most established cryptocurrency projects. And Pi was just one ship caught in it, struggling to navigate the turbulent waters and weather the storm alongside countless other projects in the crypto sea. The biggest risk for Pi? The endlessly delayed open mainnet. No firm launch date, just coming soon, and patience is wearing thin. The core team says KYC migrations and a robust app ecosystem are needed first, but progress is hard to measure. Every month without a launch adds to investor anxiety and selling pressure. The IOU price is a bet on the mainnet's future. Delays make that bet riskier. If fatigue sets in, users and developers could walk away, and the IOU price could collapse. Until open mainnet launches, Pi's potential remains locked, and its credibility hangs in the balance. The Pi traded on some exchanges right now isn't actually real Pi. It's crucial to understand this distinction before engaging in any trading activity. These platforms might list Pi, but what they're offering are essentially IOUs, not the actual cryptocurrency that you've been mining. It's an IOU, a speculative placeholder, a promise to deliver Pi at some point in the future when the mainnet launches and the real Pi becomes transferable. Think of it as a pre-sale ticket for an event that hasn't happened yet. The value is entirely based on speculation and anticipation. The IOU price is driven almost entirely by hype, social media buzz, and the general excitement surrounding the Pi network. It's not necessarily reflective of the project's underlying value or the potential of the Pi cryptocurrency itself. It's influenced by rumors, speculation, and the actions of a relatively small handful of traders who are actively participating in these IOU markets. This makes it highly susceptible to manipulation and unpredictable price swings. This activity isn't indicative of real network activity or the actual utility of the Pi cryptocurrency. It's simply a reflection of the speculative trading occurring on these isolated exchanges. The true value will be determined by the network's adoption and usage after the mainnet launch. This market is thin and easily manipulated. The trading volume is low, meaning there aren't many buyers and sellers. A single big trade, even a relatively small one, can swing the price dramatically, creating artificial pumps and dumps that can be detrimental to inexperienced traders. Even good news from the core team, positive developments, or significant milestones achieved by the Pi network might not move the IOU price at all if traders aren't paying attention, or if the market sentiment is already skewed in a particular direction. The IOU market operates independently of the actual project development. Volatility cuts both ways. The IOU market is prone to extreme price fluctuations. It offers the potential for quick gains, attracting those looking to make a fast profit, but also sudden, steep losses. You could lose a significant portion, or even all, of your investment in a very short period. Many pioneers, who have been diligently mining Pi through the app, see the IOU price and mistakenly assume that's what their mined Pi is worth, leading to potentially unrealistic expectations. But that's misleading and can lead to disappointment. The IOU price is not a reliable indicator of the future value of Pi. The real Pi price at launch, when the mainnet goes live and Pi becomes truly tradable, could be very different from what the IOU markets are currently suggesting. It could be significantly higher, reflecting strong demand and utility, or it could be much lower, especially if there's a large sell-off or a lack of real-world applications. The IOU market sets unrealistic expectations, creating a false sense of value and potentially leading to disappointment for many pioneers. And it exposes the community to unnecessary financial risk, encouraging speculative behavior that can have negative consequences. It's a financial and psychological minefield, filled with potential traps and pitfalls for those who aren't aware of the risks involved. Until mainnet, the IOU price is just a speculative guess, a shot in the dark based on limited information and a lot of hope. Don't mistake it for the real thing. Approach the IOU market with extreme caution and remember that the true value of Pi will only be revealed after the mainnet launch. Now let's talk about what could turn things around. A major mainnet migration. If the core team announces millions more users migrated, it's proof of real progress. This would counter the endless delay narrative and boost confidence. Big migration news would dominate social media, shift sentiment, and likely spark a price rally. More users on mainnet means a stronger, more active ecosystem at launch. It's not just hype, it's a fundamental step forward. Migration progress could be the catalyst Pi needs. The second big catalyst? A crypto market rebound. If Bitcoin recovers and altcoin season kicks off, speculative projects like Pi could soar. Watch the Bitcoin dominance chart. If it drops, money flows into altcoins. July could see investors rotating back into riskier bets, fueling a Pi rally. Pi's fate is tied to both internal progress and external market trends. If both align, the price could explode upward. Market euphoria alone can drive Pi higher, even without project news. July could be a perfect storm for a Pi comeback. To understand Pi, let's compare it to others. Shiba Inu dropped in June too, but it's a live, tradable asset with an active ecosystem. Cardano, often criticized for slow progress, is at least a functioning blockchain. Pi's value is all about future potential, not current utility. Its ace? Over 55 million users ready to go at launch. Most projects dream of that. But until mainnet, all that potential is locked away. Pi's price moves on speculation, not fundamentals. Its recovery depends on delivering the open mainnet, not out-teching rivals. June's fall was about impatience and a bad market, not just competition. Pi's future hinges on finally launching. June was rough for Pi. 28% down, confidence shaken. The risks are real. More delays could mean more pain. But July offers hope, a big migration announcement and a possible crypto market rebound. Internal progress plus external momentum could flip the script. If both catalysts hit, Pi could erase June's losses and surge higher. It's a classic risk-reward setup.